Hey guys, welcome back for another breakdown video. So today we're going to be talking about the London session and the trade that we took in the morning. So this is the 7th of January. The first thing we came in and did was obviously came in and marked our resistance and our supports. So as you can see, you've got a very, very strong resistance level up here with 4 candles closing on this resistance. After the resistance, you've got a clean range of around 40 to 60 pips, which is perfect. This is a very big range on gold, so you're going to be, seeing if there are any other spots of interest. And one thing that I saw was obviously coming into here was a support here. I don't know if you guys spotted that as well. There was a support on gold right about here, and you've got a range of around 40, 45 pips, which is good enough to take 20 pips out of in the trade. So yeah, when we came in the morning, so I see what we did. We had our zones marked out. Ideally speaking, we're looking for buys. Let me slow this down here. We're looking for buys above this area. Not looking to take an impulse entry. Guys, the reason we're not looking to take an impulse entry, just like I state all the time, these are rejection wicks. Okay, these wicks here signify that obviously gold at one point, these candles are very bullish and they close below the zone. Can't take an impulse entry when you've got rejections to the left hand side. You have to wait for candle closing confirmations. Wait for a pattern that you recognize. Okay, so ideally speaking, we want a candle to close above this area. Didn't happen on this one. Patience is the name of the game. All we're doing is trying to see if a candle will close up here. You can tell these candles are getting smaller bodies, nothing of interest happening above this zone. Gold obviously doesn't like this zone. That's fine. Now, ideally speaking, either it's going to come down, consolidate, it's going to come down, break this level. If it's the right setup, we can take our trade. If not, we wait for this level to be broken and come down, and then there's like 80 pips or 90 pips down to here. All right, so at this point, it's just waiting. And that's sort of it in trading. If you've got the ability to wait, if you've got the ability to be patient, then you've got the ability to make money. Okay, obviously there are other factors involved, and I completely understand that. And again, on a simulation, this is very, very easy to do because these candles are moving very, very fast, right? If you're sitting there looking at the market, there's 1,000 things going through your head. Should I take a buy? Should I take a sell? Oh, this broke below, or what's the range? It's just about being patient and trusting in your analysis, knowing what you want to see before it happens, right? So at this point in the market, all I wanted to see was I wanted some sort of support to be created so the market could continue moving up and give us an opportunity for buys. If that didn't come through, then I want to see a sell below this area and a candle confirmation below this area for us to look at sells. I couldn't care less if this candle's breaking this low, breaking that high, what it's doing right now. I just want to see exactly what the market is going to give us and what it's going to print, and that's the main thing. If you can wait, fantastic. Now with this particular candle, this is coming up to London open. Now so I'm going to slow this down here a bit. So we're coming up to London open, and you can see how this candle closes. It closes an indecisive candle, right? So this candle that's open at the moment, that's just open, this is the London open candle. Okay, this is the London open candle. So this candle came down, created a bottom wick, and now it's breaking the highs of both of these candles to the left hand side. We've got support here, right? We've got range of around 40 pips. We've got a candle that at one point was very bearish, couldn't maintain, couldn't hold bearish momentum, and came way back up. So right now we're just waiting to see the perfect entry. Now the perfect entry for this candle was when it broke these highs. I'll show you the entry in a moment, as we took it live. But yeah, when this high was broken as well, as it wasn't very far from this high, just an extra confirmation. You want to put your position into there, right? TP, fantastic. It goes up there, and your stop loss has to be at the bottom of this candle. The reason I put my stop loss here, okay, and I don't put my stop loss down here, I don't put my stop loss here, because if this candle comes down and breaks its own low after breaking these highs, then my buy trade is no longer valid. There's no point of me, risking more pips, risking more onto the market than I need to. I know if this candle comes down and breaks this low, it's not looking good for my buy position. Okay, you got your stop loss set. You know where you want to take profit. I don't hold my trades until the end of the zones are reached, unless there's a lot of volume. I like to secure positions. You can't go broke by securing in profits, right? So we're looking at here, this trade currently running 8 pips, 9 pips. That's fine. So we closed and secured here at around 18 pips. I'll just show you guys here. Around here, 18 pips is where we close this particular position. Now, the reason I closed is I was happy with 18 pips. 18 pips gave me nearly 2% on my account. 2% in a day is more than what you need. If you can make 2% consistently in trading and manage your risk, manage your losses, don't get emotional, you will be profitable. I can guarantee it. And it's a very, very good thing that we did secure. So this candle closed a very strong bullish candle. The next candle came down. And then, if you would have put your trade on break even, you would have been stopped out. If you secure some, that's fine, and then get stopped out and break even. But if you don't secure anything, put your position and break even. This is what I mean. It's always good to secure some profits at least. Now, I did keep an eye on the market. I don't usually do this. The reason I kept an eye on the market was purely because of this resistance level. I knew the amount of clean range that was behind it, especially on the 1 hour time frame. This was like 120 pips. So I wanted to keep an eye. So when New York came around, I looked into it and just saw sort of what the market did. Now, fast forward this, as you can see, it did nothing but consolidate until New York open. This candle finally managed to close very strong bullish candle above our level of resistance. Okay, now this was a very interesting close for us. If you skip, now this is the 1 hour close. As you can see, the 1 hour came up. So you've got to imagine the 1 hour starts here, ends here. 66 pip 1 hour candle. And buys were perfect. A 15-minute was very good for a confirmation here. If you didn't have an entry set, if you wanted to be risky, you could have entered once this high was broken. Again, it's completely your choice. But I just wanted to show you this, that once this resistance level was broken, then gold eventually did actually continue moving up, and it was a beautiful trade. But we were done. We took out 18 pips here and called it a day. What I wanted to show you guys is the trade and then the actual entry that we had set. So as you can see here, this was our entry just as this high was being broken, and our take profit was up here, and we closed before obviously using the magic keys and closed and secured 18 pips. And thank you guys very much, and look forward to the next video.